And how's it going, everybody? My name is Antonio, and I'm on the barbecue today on November 23 with Jonathan DeLuce, CEO of Abitibi Metals, a recently renamed and refocused, if you will, company, which has, as the name suggests, focuses on the Abitibi Greenstone Belt in Quebec, Canada. Who's not here with us today, though, is your financial advisor. This conversation is not going to include any recommendation to buy or sell anything. Instead, it will be a casual talk, just a conversation between two people on the internet. And if you haven't been burned yet, you're not supposed to blindly trust strangers on the internet. So for as far as you as a listener or viewer are concerned, this is going to be a conversation that's general and impersonal in nature, and it is definitely not a conversation that you want to use as independent research because it's going to include a lot of forward-looking statements about uncertain events that may or may not happen in the future. What that means for you is that you have to pause the video right now, read the full warning that is on your screen right now because this involves a lot of risk. And please visit setterplus.ca for the company's official filings, analyze them, and consult a professional investment advisor before taking your own decision in the end. That all said, Abitibi is listed on the CSE under the ticker symbol AMQ, where an average of about, as of recently, the average volume has actually been increased. So there's about 400,000 shares that trade each day, with a market cap of about 14 million Canadian dollars at the time of recording of this video and about 63 million shares outstanding. This is a 23-cent stock with a 52-week high of 32 cents and a 52-week low of about 3 cents. There are roughly 3 million options and about 3 million warrants for a total number of, let's round it up to about 70 million fully diluted shares. About 43% of those shares are in the hands of insiders, so that's almost half of all those shares. Then there's another 13% is in the hands of the CEO's family. The DeLuce family is kind of famous, so people might have heard about it. Then there's also high net worth individuals and strategic shareholders who hold about 11%. And then we have two corporations. One of those is Wallbridge Mining. That's another Quebec-based company that holds about 4% of Abitibi, leaving the effective public float at less than a third of the total shares outstanding. At the end of June this year, the financial filings tell me that the company had about $1 million in cash against account payables of about $100,000 and no long-term debt. As I said at the beginning, this is a recently we could call it a refocused company because they secured an option last week on a polymetallic, so that'd be copper, gold, silver, and zinc discovery. It's called the B26 discovery. It's up there in southern Quebec. Well, it's close to the border with Ontario, so that'd technically be southwestern Quebec. And it's also on trend with their next door neighbor's deposit, also known as the Detour Gold Trend. And it is about 7 kilometers away from the historic Selbaye mine, which operated for over 20 years. It was a big mine up there. So in normal people's terms, this is in a neighborhood known for mining, and there's and generally lots of gold. The B26 discovery is a VMS vein deposit hosted in volcanic felsic rocks. Again, in normal people's terms, this is just light rocks that came out of a volcano, basically. B26 has a resource on it dating from 2018. Its previous owner drilled over 115,000 meters in a total of 254 holes, which resulted in about 400 million pounds of copper, 286,000 ounces of gold, and some zinc and silver as well in there. And that's in the indicated and inferred category of the NI 43-101. Abitibi Metals, of course, believes that they can extend the project, which is why they are trying to get their hands on it, both laterally and at depth, because as it stands right now, the resource was done on basically a deposit that knows a 1 kilometer strike and an 800 meters depth. So again, they believe they can expand that. Most notably, Abitibi is the first company to take this asset public. The discovery was made in 1997, so right after I was born, actually. And it stayed in the hands of one company, which published that resource in 2018. Right now, it's worth paying attention right about now because Abitibi does not own this project outright. Okay, they recently signed an option agreement, which gives the company the right to earn up to 80% interest in a two-step option. More specifically, the first step of that option covers the first 50% in a project, which Abitibi can get if by the end of 2026 they make a cash payment that's equal to $400,000 and incur exploration expenditures of up to $7.5 million, while also issuing 9.9% worth of common shares to the company that currently owns the project. Now, if John likes what he sees while exploring the project, he's got the option to acquire an additional 30% for a total of 80% ownership in the project if he can deliver a PEA while making a cash payment of $1 million, and also topping up the current owner's position in AMQ to a fully diluted 9.9%. They have time to do that up until 2029. To do all of that combined. So, and although that's clearly ways away and it may or may not happen, if it were to happen, Abitibi will then form a joint venture with the current owner of the project, which means that, again, big if here, but if they move forward with the development of this project, and those are forward-looking statements, the current owner will have to finance its 20% share of the development expenses. One of the reasons why John wanted this deposit is, and I'm assuming here it's because it's closer to another project that the company has an option on. That one is earlier on in its life. It's earlier on in the Lassonde curve, if you will. It's located about 7 kilometers away from the B26 deposit. It's a smaller piece of land. It's about 3.5-4 square kilometers, I believe, 926 acres. But it's being drilled. It's been drilled multiple times in the past. Over 30,000 meters have been drilled in 120 holes, to be specific, resulting in some great results that we have from that drilling. Great variability of between under 1 gram per ton to over 55 grams per ton of gold, and that over a 600 meter strike and up to a depth of 500 meters. Abitibi also has 4 grassroots projects, which I hope we'll touch upon later on in this conversation, but it feels like I've been talking for long enough right now, so I'll be shutting up, welcoming the CEO. John, thank you so much for investing your time in me, sir.
Thanks for having us. That was a good overview of the company.
Pleasure is, of course, mutual here. What am I missing? What am I getting wrong in the overview of the company here?
Well, I think you've captured the really transitional transaction that we've announced last week, but I think really you've mentioned, I guess, we'll get into it. So really, looking back a year, we were sitting with our Beschefer project, which I believe is a very strong near resource gold project that we optioned off of Wallbridge. But as you said, my family office are the largest shareholders of the company. We've participated in pretty much all financing since we brought the company public in 2020. But what we made the tough decision, we weren't getting rewarded by the market on our gold results with Beschefer. We've been in a very challenging market the last 2 years, but I made the tough decision to take a pause. We brought our cash burn down to a minimum. We pride ourselves on having one of the lowest G&A burns in the business at around $15K a month. And what I promised and I set out for my shareholders is tough markets provide very good opportunities. So I said, let's go after a home run asset. We have a good reputation. We're fully aligned with our shareholders. We have good connections in the industry. Let's find a home run asset that will push through these tough market conditions and will be very well positioned for when the market comes back, which we're confident will. The timing is hard to say, but the demand supply for commodities, gold, silver is there, and it's going to come, but you can't wait for that to come. You have to get ahead of that because good assets won't be available when we have the tide in our sails. So we reviewed a lot of assets, but we foreshadowed to the market that we were in the process. In October, we announced as part of our as part of the rename to Abitibi Metals, we announced that we were looking at advanced stage copper and gold assets that either had a current resource, historical resource, or was within a year of producing a resource. So we wanted to acquire something with a lot of meat that we could push through these market conditions, allow for a lower cost of capital while complementing our current portfolio makeup at the company. So as I said, we reviewed a lot of assets, but really the deal with SOQUEM that we announced last week, that asset stood out to us and was at the top of our priority because I'm sure we'll get into it in more depth, but like really the standout for us, the discovery was made by SOQUEM. It's a private company funded by Investment Quebec. Since the discovery, it has been owned by a private company. The market has never had the opportunity to value what is, I think, a very significant starting resource. Very strong partners and what I believe will be extremely supportive shareholders. And in terms of the option terms, I think it's very reasonable for an asset of this size. Really, they're wanting to see money put into the ground, just as we want to see as management, because that's where we're gonna drive value for our shareholders. So we're very excited. There's a lot to unpack there. And really, we view this as both a discovery and an acquisition because this asset is largely unknown to the market. I think the majority of the market never knew that this was available. And that's why we saw this is such an arbitrage opportunity. And there's a lot of low-hanging fruit that we've announced today and in our year one exploration plan that I'm looking forward to getting into further. But it's been an exciting couple weeks for Abitibi.
It has indeed been. There's lots to talk about, but I just want to start off by excusing myself for butchering the name and calling it Abitibi, but it's Abitibi. Yeah, you're pronouncing it right. I gotta get used to that.
No problem.
Let's maybe talk a little bit about the sort of the history of the project too, because it was in the hands of, if I found that correct, if I read that correctly, one company who founded a deposit in 1997. And then, they drilled it for over 20 years up until 2018 when they did the resource on it. Why didn't they ever go public with it?
Well, SOCOM is essentially an arm or a private company that's funded by the Investment Quebec, which is government funding. So Quebec is the best mining jurisdiction, in my opinion, in Canada. And SOCOM is an excellent example of that. They are a group that develops assets to attract capital for investment in Quebec. So they're not, I believe, in the business of taking assets public. They develop assets to a point in time that they're able to attract strong partners that are in it for the long-term success of a project, that share the mandate of creating value for all stakeholders, just like the Quebec government does in their standout support of the mining sector compared to the other provinces in Canada. So it's not within their mandate, I believe, to take assets public, but it allowed us the opportunity to present us as strong partners and our value case for why partner with us, and really provided the opportunity that we're at today. And we're very fortunate for SOCOM allowing us the opportunity because we do believe it's a very significant asset.
So I understand, I suppose, why that specific company didn't take it public. So I formulated my question wrongly. I was just wondering why didn't anybody take it off their hands and take it public like you did? And so basically what I'm asking here is like, well, why are you the chosen one to make this bigger than what it already is?
Well, I think I can't speak to the other suitors that they've considered in the past, but I can only speak to our approach on the asset. Is we provided a true partnership approach with SOCOM that focused on providing them an undilutive equity position. So they didn't have to worry about us being unprudent managers of capital and diluting them out. That was very important to us to reward the efforts that they've put into this project. We've provided a strong work commitment, although we do feel that hopefully, and we believe in hindsight, this will look like a very good deal based on the merit of the project, where commodity prices are and the growth potential of the asset. We also have my family office has a strong track record of partnerships in Quebec. We were the founders of Air Quebec, which was an airline, Quebec-based airline that we partnered with the Cree First Nations. So we operate with a lot of integrity. We have established partnerships in the past in Quebec and strong First Nations relationships. So I think it was a matter of our reputation and integrity and how we are well aligned with shareholders. I think providing a partnership approach to SOCOM, and also we have good contacts in the industry. We are assembling a world-class advisory team from very notable individuals from that have developed mines in Quebec. So I think we're strong business operators, and we're going to be able to bring together the right team to see success at this asset.
Does the fact that the asset has government involvement in it, right? Well, the government owns it as of now, but assuming that you're going to go through with the options, fulfill the payments and fulfill the work and all that. Does the fact that the government is involved in this asset mean that you're going to have a better regulatory path, if you will, and better community support or something along those lines?
I believe so. I think that SOQUEM are very strong operators. I think we're going to operate with similar stakeholder involvement to ensure that everybody through the process is happy with the decisions and what we're doing in developing the project. So I think that they're excellent partners, and I do think that they will be supportive shareholders, supportive partners, and will help add value through the process.
Okay, fair enough. They are, well, I assume they will be. Government agencies oftentimes move slowly, though, and I mean, you can look at this being discovered in 2017, and the resource came out 21 years later. If this was a private company, I'm assuming it might have been pushed through quicker than that. And let's maybe then talk about the timeline here, because you mentioned in the news release, the initial news release, that you're doing a 12,500 meter program with a smaller, I believe, 2,750 meter, expected to start in January next year, so start rather soon. And in there, you said that it's meant to delineate the open pit potential of the B26 deposit, but also to extend mineralization at depth. So talk to me about timeline. Talk to me about where exactly you're drilling and how much of the drilling will be focused on the open pit potential versus on the depth expansion potential.
So the 2,750 meters will kick off in January. We see low-hanging fruit before we really have to drill at depth. So the sweet spot for us is the 2018 resource did not have a large focus on the open pit potential. It was focused pretty much solely on an underground model, which it certainly makes sense with the orientation of the mineralization. But at the same time, in order to have some preliminary PEA considerations, the ability to introduce a strong open pit bulk tonnage model within that system will help us drop the cutoff, increase the economics. So really, we don't believe the open pit potential there has been adequately assessed. I think that we need to drill north of the deposit to look at the bedrock interface extensions of the mineralization. We also need to go back to historical core to do additional assaying. The assay coverage, we believe, is not complete. It's very clear the high grade zones in this deposit, but the disseminated zones are not as easy to tell visually. So we do believe that some of this bulk tonnage open pits type of material we may be able to uncover, and we want to determine the true boundaries of this deposit. So part of what our first year exploration plan is drilling an updated internal and internal resource 3D model, a gravity survey to help outline the overall structuring of the deposit and targets. So that's the open pit portion. Additionally, within the first 300 meters, this deposit still hasn't been drilled with complete coverage. So I think right now we're looking at where can we get the best return on our dollar spent in the project, considering our current market cap. And we believe that that's a combination of trying to prove the open pit model here, and also doing high priority follow-up within the first 300 meters vertical. And that's what the focus will be in January.
So not going deeper yet in January. And to get more specific on the where here, the historic holes, relative to the historic holes, where are you drilling?
So the open pit will be drilling up dip of some of these historical holes to really test the bedrock interface, and also whether or not there's additional parallel potential lenses to the north, whether those are connected to the current system or standalone parallel zones. That's something that we'll be focused on. In terms of the infill or short extension holes that we'll be focused on, we're going to be looking at the higher metal factor pockets of the deposit, ones that have current spacing that need to be filled in. We're not going to be drilling to twin holes. We are drilling to create meaningful developments on the deposit. So we're going to look at the pockets that need more coverage. And that will be part of the second half of our objectives with meaningful infill and short range extension focused around some of these high metal factor intercepts, but focused in the short to medium term solely on the copper gold zone, which we believe will produce the most value.
Okay. Do you have any internal rules in place or something that you say, oh, we're stepping at least 25, at least 50 meters from the historical so that we're not twinning or close to them?
Yeah, that 25-meter range is our target. That's indicated to inferred spacing.
Yeah.
So we are looking to fill that type of gaps, which is meaningful resource drilling, especially on some of these very high metal factor intercepts that if we're able to duplicate and fill in those gaps, it'll be very influential to the block model of the deposit. So there's various things that we've outlined that we need to investigate and improve on within the resource. Some factors that we believe could help the tonnage coming out right out of the gate before we even complete any drilling.
Okay. Yeah, I think you mentioned that in one of the news releases too. I did see a lot of grade variability, as I mentioned at the beginning, in the historical grades from under a gram to about 55 grams per ton. Maybe you can talk to me about what's driving this variability geologically, but also just how you look at it and how you're going to be dealing with it.
Yeah, so B26, there's certainly great variability there. We've also seen some very impressive pockets of strong gold intercepts. I think that's the gold and precious gold silver potential of this asset, I think, hasn't been well highlighted or investigated. This has been focused on as a copper zinc asset, which rightfully so. That's the driving factors today. But it is rare to see gold involved with these polymetallic systems. And we do want to investigate whether or not there's a bigger gold source at some portion of the deposit, especially when you compare it to some of the deep-seated polymetallic deposits in Quebec. Some of them have the gold coming in deeper, but the main thing is the ingredients there are there for a better gold component. And now moving back to the copper, like the copper, there's variability, but there has been quite a bit of continuity amongst the kilometer in terms of copper grades. So I think there's certainly higher grade pockets, and that's what we're going to investigate drilling out and adding on to those areas. So it's part of our mandate this year is we need to have better boundaries of the deposit. We need to look into grade variability and having a stronger 3D model to understand which portions of the deposit could yield the best return on our capital invested in terms of tonnage and grade return. And we need to go back to some of the historical intercepts to ensure that they were adequately sampled and that we're not missing some of the low grade bulk tonnage material around these very high grade
So you'll probably, okay, so just sort of to summarize this, what you're going to be proving up next year is grade variability, continuity. That's basically the two things that you're going to be focusing on. Do you have the core from the previous drilling, by the way? Is that all in your possession?
Yeah, that's another huge bonus of this project is SOQUEM has a core library and warehouse in Val-d'Or where the majority of their historical drilling is stored. They've really have a very strong database that we're entering this project with, that we're able to take advantage of and leverage all the investment that they made at the project.
That's right. Well, it's probably a huge place to store 115,000 meters of drilling. It is also polymetallic though, deposit, as we mentioned, which is not always, it could be not always, but it could be challenging metallurgy. Did the company that came up with the resource ever test recoverability of the different metals?
Yes, so that's one of the probably the most common red flag I've been asked since we've announced the deal. But they did do preliminary metallurgy at the time that they announced the resource. Recoveries were on both zones were above 96%. So it's a very clean ore. There's also the neighboring Selby mine that produced 53 million tons of similar similar mineralization over 20 years. So the recoveries there were quite strong. Now there's some differences in that no two systems are exactly the same. There is some differences with B26, but the standalone metallurgical testing in 2018 had very good recovery. So the initial stages of that testing have come back quite strong. So it's not a red flag at the present time, and it was quite clean.
Right. What was that bottle roll, I believe, that they did?
I believe, yeah, I believe so.
Okay. Okay. Interesting. Did they assay for penalties, arsenic, mercury, something else?
Yeah, my lead Geo was talking about that with an analyst yesterday, and he did go over the potential contaminants that we see in other camps like Matagami and Rouen at times. So those elements were not in the preliminary testing that was done. So it is a very clean ore from what has been determined to date.
Okay. I mean, you probably thought about it, but are you going to be asking for arsenic, mercury, or other penalties that you're going to be announcing, or not right off the bat?
I think we will that's certainly part of our plan, because we'd like to independently test that, especially before we accelerate in our growth plans with the asset. So that's something that we will be addressing within the 6 months, looking at each component of what will be successful, putting together the economics on the PEA goal that we do have within the option period. So that is something that we'll bake in as part of our strategy, and some of the advisory team members that are coming on have direct experience with that. So we'll leverage their experience building mines in the region to determine how we can best address and test these risks.
Right. Well, a lot of it, I suppose, depends on the drilling that you're going to be doing soon, to get direction sort of on a see as you go type basis, if you will. You did mention again, and previously we also just sort of touched upon it, that you want to drill deeper holes. Why is that? Like, what gives you the confidence off the bat that there's something at depth here?
So the SOCOM did drill up to 800 meters vertical. So they have proven that the mineralization expands to depth without limits to date. And there's a lot of infill that needs to be done between that 300 meter to 800 meter vertical. So there's a lot of what we believe mineralization to build within the current defined boundaries of where they've proven mineralization to date. But right now, we're focused on where our current market cap is and where we feel will deliver the most value for shareholders. We don't think that we need to drill deep right now. We think that there's enough of a value arbitrage for us at our current market cap, getting the story out there, focusing on shallow drilling before we need to spend the larger funds required to drill 1,000-meter holes to expand this at depth. That's certainly a priority of ours, but we're also weighing out what's gonna be the most meaningful return on our capital invested into the project. And I think the top priority for that is testing the open pit potential, given what that could do to the economics and to the value proposition of the project. Then looking at the first 300 meters, and I think once we meet our evaluation and financing goals, and we need to take this to the next level, the deep drilling is where we'll go next. But the main thing is it has been proven down at depth. So that question has been answered. Whether or not how far it goes, the metal factor is another question. But the main thing now is that they have proven it to depth, but we need to ensure and see where our best return on capital is. And we don't think that's at depth at the moment, considering our market cap.
And when you say at depth, you're talking about 300 to 800 meter. You're not talking about below 800.
Well, below 800, I think certainly that we, like at the present time, we're not planning any holes to follow up on the significant down dip extension of the system of below 800 meters. That's right. But right now, the bulk of our focus is like the 0 to 300. I'm sure this year we'll have holes that test the 300 to 600, but we're not going to be chasing this at depth as of now because of the cost and what we think will be most beneficial to our market cap, and also where we believe will add tonnage to the system cost efficiently.
That's right. Well, that last part is probably the most important part. What are you paying per meter of drilling for the first? I suppose what is it per 500 meter, I believe. But what are you paying for the first 300 meters that you're drilling here per meter?
So one of the reasons why I think part of our value proposition to SOQUEM is we're able to drill just over $200 a meter all in, which is very competitive compared to our peers in the Abitibi. So we have the contractors and also the hold all of our contractors accountable to ensure that we get the most out of our money. So I think we drill at a fraction of a lot of our competitors around us.
Mm. And 200 meters, you said all in. So I'm just going to assume that it's like all like assays and moving the drills, everything.
Yeah, so that's our last program at the nearby Beschefer project. We delivered for 200. Nice. I think that we may be up another $10 with inflation pressures, 15 maybe. But our goal is to deliver as close to that 200 mark as we can.
Okay, and that's one drill that we're talking about?
One drill, that's correct.
Okay. Well, for the first program, it makes sense. Mm-hmm. And it's probably too soon to talk about potential follow-up programs and more drills. But let's maybe talk about what success looks like for you. I mean, you in the news release in the initial news release, you mentioned that you want a sort of 20 to 30 million ton high-grade copper resource in a PEA, which you have up to, as I said, if I'm not wrong, up until 2029 to complete according to your option agreement. But what does that resource look like more specifically? Like, is it 50-50 underground open pit? Is it an 80-20? Is it, you say high grade copper? What's that? Is that 1%? Is it 4% copper? Talk to me about these things.
So I think that if we're able to, I think our top priority is to test the open pit potential. If we're able to establish a significant open pit component of an updated resource, it will help with the economics significantly and drop the cutoff, bringing in more tonnage from outside of what's currently included in the resource. So that's, I guess, our priority for this year is to start to answer the question whether or not there's bulk tonnage potential here through the drill bit, re-assaying historical core, and some of the updated 3D modeling that we're going to be doing. So that's where we see the low-hanging fruit to try to outline to the market that is a realistic target. And if we're able to build up the open pit component, I think that target could come a lot sooner than just a pure underground model. So in terms of the open pit is one side of it. In terms of the high grade, I think if we're able to maintain the 3% copper equivalent, just under, then this would be considered quite a high grade polymetallic deposit compared to the general copper market, to the polymetallic market, to some of the other competitors within Canada. So our goal is to try to develop the underground with maintaining the grades that are in the system today. I think the inferred resource had stronger gold copper numbers, which shows that the boundaries of the deposit have stronger grades. So that will be part of our follow-up and where we see opportunities for growth. So I think the open pit will certainly be lower grade. It's too preliminary for us to try to forecast what that exactly looks like. But if we can maintain the grades on the underground that we have today, this will be considered quite high grade in terms of polymetallic and copper opportunities.
You make a good point that it is pretty preliminary what we're talking about here. It's a lot of arm waving. This is the forward-looking statements that I talked about at the beginning. If I'm not mistaken, 3% copper is 30 kilograms per ton. That's 66 pounds by 3.5, 3.6, something along those lines, 230-ish, $230 rock at 3%. So that's why you're mentioning that it's high grade. So that's over 4 grams per ton gold equivalent right now. Again, a lot of arm waving here. You're not supposed to make these equivalents, so on and so forth, just to sort of get an idea of how valuable of a rock we're talking about here. If but 20 to 30 million tons for high grade, that's not small either. And I'm thinking what that means for you as a company if that were to happen. Again, pretty preliminary up in the future, but would that make you dependable on getting a major or mid-tier involved to help you move past that? Because I don't imagine it will be cheap building something like that. And of course, it's going to depend on where you're at in terms of market cap. But is it sort of a no-go unless you have a strategic partner, or is it something that you can move forward yourself?
I think it's something that we're always weighing where we're at to see how we can best create value for shareholders. So we're very early on in the story. I think that we need time to get our story out to be valued for our first phases this year, to get valued on the option we've secured, especially once we prove to the market that that the financing risk is addressed. I think one risk that, as you mentioned, that we have an option to earn into this asset, but once we secure smart capital and complete prudent financings, that would take the risk out of us earning the asset and more so focus on the valuation and what that means for the company. So yeah, I'm not sure if that addressed your question.
Probably just too early to talk about that question.
Yeah.
But I'm also just prying a little bit at your involvement with a potential major and trying to figure out, like, are you openly, like, are you advertising that you want someone to work with on this one, or do you want to do it yourself?
So our plan is to do it ourselves. We're always open for conversations because at the end of the day, it's all term dependent. If the right opportunity comes along that provides value for all stakeholders, then we're always going to take a meeting and see what the interested parties are going to offer. But where we see more value is we're trying to target strategic investors. Strategic investors are very firm money to get involved with the company, because I think if we the better and smarter money that we place stock with today, how it creates a much better basis to hit our financing goals next year that are much larger in nature. So our goal, so we're open. We have good connections with the majors. We talk to them regularly, but I do think that this is too early for those conversations. But I think our goal is to bring in either or some strategic investors that are long-term shareholders that are able to add credibility to our story. We may not accomplish that, so it's part of our strategy. But I think at the end of the day, we will finance this as the largest shareholders of the company. We're going to do it in as smart of a way as we can. But I think if we're able to attract a strategic investor that's able to add credibility to the deal, while also working with them and their experience or a group, that's where we're at today. But as I said, there's no guarantees of anything closing, but we have plans in place to move this forward and hopefully do so in the ways I've mentioned. But as I said, it's early to tell, but that's our goal and our objectives.
You talk about potentially bringing in a strategic, investor shareholder, placing those shares in stronger hands. Is there a still place to do that within your share structure? I mean, what was it? 28% of the company is really the public float, and all the rest is more or less in those stronger hands already. But you still probably want liquidity in the stock, but there's not much of that, because I'm sure that those 28% is just people who you're not, it's not high net worth individuals, it's not you, and it's not corporations. But within retail, there's also strong hands. I know people who hold their stock for 3-4 years or whatever, and they're just not selling. So off that 28% effective public float, it's probably much smaller in reality. So is there really a place to bring in another 10, 15, 20% shareholder?
I think there's a place for it. I think that we've assembled a strong value proposition that through financing, through potentially positioning out of our family position, there is ways I believe we can partner with a strategic or group of strategics if they see the value proposition that we do at the company. So it is tightly structured. We have had good liquidity since announcing the deal. So I do feel like there's room, but because of that tight share structure, I think our developments will be better reflected in market response as a result, especially during what is very tough market conditions. Like we've been able to stand out the last week or 2 week, the last week in a very dire junior mining market. So imagine the response that we could get if we have the market turn around in Q1 or Q2. I don't know when the market will turn around, but we're confident in the commodity prices, copper, gold, zinc, silver. We're going to have a very fierce rally at some point, and we'll be well positioned to capitalize on that with the assets that we have in the company.
With the assets that you have in the company is actually a good point, because does not only count the B26 deposit, because you have the Beschefer project as well. I sort of mentioned at the beginning that you're a refocused company, but I don't even know if it's fair to make that comment, but you can tell me if it is. So how are you going to be splitting the focus in terms of, sweat equity, as everybody likes saying, but also just dollars spent between B26 and Beschefer?
So the majority of our budget will, like, just looking at 2024, our plans is to drill at least 10,000 meters at B26, 5,000 meters at Beschefer. That 5,000 meters will complete our option with Wallbridge, and we will have 100% ownership of Beschefer. We did get well ahead of that option. We had a 2-year obligation to spend 1.25 million, which we exceeded by far with spending 2 million. So we're hoping to take that same approach with B26. It's not our goal to hit the minimums on these work commitments. However, given that the deal is light in the first year, I believe that our partners have given us the ability to get the story out there and raise capital at the right time without being in a rush to come out of the gate with massive drill programs. Now, we feel that this project will warrant moving from 10,000 to 30 to 40 to 50,000 per year, but this gives us the ability to do it in a smart way, given that we are going to be rewarded alongside all of our shareholders with the equity and the stock price. So we need to make sure that we're getting rewarded for what we have done, what we're going to do, that we're able to move this forward while maintaining dilution. So that's where I'd love to do a huge raise and start with much larger budgets, but we want to be smart and looking out a few years to how are we going to get this to the 50,000 meter per year mark, which is very forward looking, but we're looking out. Like if we don't plan for that today, it's going to be much harder for us to get to those objectives. So we're looking at this out a couple years. We need to place the stock well. We need to bring in good partners to really hit our milestones of growing this from a 50 million market cap company to much larger. And I think B26 could justify that. And we just have to look out and plan for all that coming together.
And that's one of the main points right there, right? Raising capital at the right time. That's what you mentioned here. When is the right time? I mean, your stock has done a 5x over the last 3-4 months, something along those lines. So a lot of people, might get a little jumpy on this, seeing, stock in this market, a stock went 5x. You've got $1 million, not enough to do the 10,000 meters, as you said. That's costing you at least 2 million, maybe 2.5, even depending on G&A. But you mentioned slow. Anyways, you need more money. When's the right time to raise it?
So right now we're looking at smart money. Like we are funded for the January drill program. And as you said, our G&A is very low, so that's not a concern at the present time. So we are trying to find the right money, and trying to look at the right money, and raise at the right time. So we are looking at high quality money now, and there's nothing set as of now, but in order to have medium-term success at this project and hit the milestones that we want to achieve, placing and doing the right financing right now is extremely important. And we've put a lot of our own capital into the company, and we've shown to the market that we will backstop the company ourselves on financings. So we have the flexibility to ensure that we raise at the right time with the right people. So we're working on that, but we're not hostage to the market. We're not hostage to investment bankers. We will raise the right capital, and hopefully with the right people. But we're not in a panic. I think we're going to raise in a position of strength, and hopefully we're able to bring together the right A quality money that makes it for a strong first half of next year, positioning the company to raise the likes of 5 to 10 million.
Okay. Well, that last part again got me thinking. And it's gonna make sense in a second. But what is it? Is it it's year-round drilling in Quebec, right?
That's correct. Yeah,
Okay.
we have all your access road. There's a power line that runs through the project, which helps on the economics side of things. So we're not limited to drilling in one season.
Well, so why I'm asking that is because I'm thinking when the phase 2 program might come, but that's probably going to come with the money when you think it's the right time to raise with the right people. That's what I'm getting out of this. What then you say you're working on it. What does working on it mean specifically in reality? Because it's quite different than, just going to a conference or just doing a bunch of interviews, getting it in front of retail. You want to place the shares yourself, like you want to sell shares almost on not almost, but on a handshake, basically. What does that look like specifically for you? What do you do exactly to get that deal done?
So we've leveraged our contacts that we've had success in the industry before. Like we've invested alongside various groups and had a lot of success over the last 25 years of our family office being in the business. So we are going back to some of the partners that we've had success with in the past to see if they're interested in the opportunity that we're presenting with Abitibi. So we're starting these discussions. There's no assurances that any of these will close, but that's our process. We're going to leveraging our contacts in the industry that provide quality money that are in these names for a medium to long-term win and see the long-term value of these of B26, of Beschefer, of our grassroots portfolio. So we started those conversations. There's no assurances that they could lead to anything, but at the same time, we have backup plans for financing, and we're confident that we'll hit those milestones.
Okay, fair enough. Fair enough. As we mentioned, G&A is indeed on the lower end right now. Do you expect that to be moving higher next year as you're ramping up operations?
Yeah, I think it's gonna move higher, but I think we're always gonna be within the lower quartile of the G&A burn of our industry. We're in an industry that's it has an awful reputation. Like the G&A burn for these companies are embarrassing, some of them. So we will always be very competitive on our G&A burn in comparison to our activities and the size of the company. We pride ourselves on that. We pride ourselves because with our participation in financing, we treat it like it's our own money because a lot of times it is. So we're in this to like our G&A will scale, but I'm confident it will be in the lower range of the industry because it's just crazy what the burns of some of the companies within the business.
Of course, yeah. I think you're saving money on exchanges too. You're listed on the CSE, right? If I'm not mistaken.
Yeah, we're currently listed on the CSE. We are going through the process right now to have our full OTC listing. We're planning to do that by January to overlap with our drill program. So we are, where the CSE's been a very, very supportive exchange. The cost is lower, but I think the reputation has gone better on the CSE. I think we're going to help with being a standout as well. But the CSE has been very supportive. Where we go from here is hard to say, but right now it's a good fit for us.
Okay, because I was gonna ask where do you see this going, and why I'm asking this is because there's certain brokers in Europe. So one of my brokers, for example, has a rule on it that says if it's on the CSC, it's got to be above $40 million. The market's silly and it shouldn't be there, and I agree with you, but it is there. And I have a different broker for that exact same reason, but it's the reality. So how are you looking at potentially going to a different exchange?
It's part of our 1 year plan. I think that some of the partners and groups that we've in discussions with, because of our track record as management, the CSC is less of a concern to them. So it hasn't been something that has been any has limited us to date, but I do understand that there certainly is brokerage houses that have limitations or as you said, a minimum market caps for the CSE. So it is something that we are considering. I think the OTC full US listing will open up a lot of liquidity in the US, but at the same time, if and when it makes sense to transfer to an exchange like the venture, we'll look at it. But the CSE has been very supportive. It hasn't limited us up until this point. But we're going to move the company with what makes sense, what will create value. So it's something that we've had early discussions on, but it's not something that our focus right now is the OTC, and we'll revisit after we have the full OTC listing.
Right. Okay. So to high level recap, focus right now on the B26. You're doing 2,750 meters of drilling initially, beginning of next year, to basically improve on what previously came out of there. And based on that, you're going to go looking for capital to finish a 10,000 meter drill program. That's where the bulk of the focus is going to be. And then finishing off the work on Beschefer so that you can get 100% ownership in that asset as well. What about the greenfield assets you have? What do you have? 4 of them, I believe. Any plan on monetizing them or doing any work besides the mandatory work on them?
Yeah, so we did monetize one of them through an option agreement on Bonanza. So that's been optioned and being funded by another party now. So we view the grassroots, take a prospect generator approach on. We've established good targets on each of them, where we're going to drive value for our shareholders, and the most bang for our investment will be B26 and Beschefer. So we will be looking to option or sell our grassroots portfolio. Our preference is optioning them so that we have upside through equity, through NSRs, and through other metrics. And I think once the cycle picks up, we may have more of a budget for grassroots. But right now, when considering where we're going to get a return on our capital, it's within B26 and Beschefer. But we'll still get the return and exposure by trying to find good partners for our grassroots assets.
Okay. But not as actively, I suppose. Like you're not advertising. I mean, you probably do something if it comes across your desk, but you're not necessarily advertising for it. Okay. People oftentimes say that you should have sort of goals and plans and model your goals after people who are way ahead of you, but then model your plans after people who are only a few steps ahead of you. In your case, that's companies. What companies are you looking up to when it comes down to where you want to be, say, in 1 to 3 years? And then what companies are you looking up to when it comes to the longer period, which is sort of 5 years up until that 2029 timeline?
So I think a good example of where I think we're at and the potential value creation in our strategy is Wallbridge. I believe it was around 2018. They acquired a very small high-grade Fenelon deposit, and they were around 5 million market cap. But through discovery in the drill bit and resources that they put together, they accelerated up to a very significant market cap in 2020. They leveraged that to consolidate the district around them and some other very strong opportunities that they identified. So I think a different mineralization type, but the basis is we started this at 5 million. We've had initial re-rating. We're excited to drill and outline the potential of this asset. and we're still in a market that valuations are very low. So our goal is to leverage success at this asset to acquire other items adding on to B26 and Beschefer, but hopefully seeing the re-rating potential that they did through the drill bit. But looking out further than that, I think Foran Mining in Canada is a good example of a company that has a polymetallic deposit and the support through the large relatively recent investment from the Ontario Pension Fund, through the support by the government support for that significant polymetallic deposit, and the valuation that is now attributed to that development. So I think it's part of the reason why we haven't put together comps in our presentation now is just there's so few exploration and development polymetallic opportunities in Canada. And we see other comparables like the Larone deposit that has been a flagship for Agnico. But until we really start talking about that, we want to have a quality comparison and an assessment that we can provide a basis of making those claims. But that's part of what we're working on in decks coming out over the next couple months. We are going to be comparing our story to some of these deposits in either Quebec or Canada to try to show the market the potential of this. But we don't want to just get it out, point fingers without having a basis behind it. And that's what we're putting together at the moment.
I don't know much, but I do know that people love comparables, but at the same time, people hate bad comparables. So if you put something outrageous on there, and you put BHP on there or something along those lines because they had the mine next door, that people are going to get pissed off. So you're doing a service by doing this. What's the relationship, by the way, with Wallbridge? I mean, 4% ownership. I know where it's coming from, but where is it going?
So the next payment to Wallbridge is in February of 2025. They'll be issued just over 2 million shares, bringing them up to a position of just over 4 million shares of the company. That will transfer 100% ownership of Beschefer to Abitibi Metals. So we have a good relationship with Wallbridge. They've been a very supportive shareholder and partner through us executing this plan of winding the company down to a minimal burn to look for a home run company making acquisition. So I have good relationship with Wallbridge, and they've been excellent supportive partners to help support us in getting to where we are today with the B26 announcement.
There's probably something I should ask them, and I'd like to get them on an interview too. But I'm wondering about their plan with those shares, because once you issue those 2 million shares, they're going to be an even bigger shareholder than it is right now. And so the other big shareholders, which is mostly you and your family, I can get a feedback on that, and I more or less know that you're not, like, you don't want to be selling because you would be hurting yourself too. But each large owner sort of represents an opportunity, but also maybe a risk if you don't know their plans with those shares. So that's what I was asking. But is where is this relationship going? Are there going to be any more synergies in the future? And what do they really plan on doing with those shares?
Yeah, I think it's hard to say. I think that I can't speak on their behalf. I believe that they're happy shareholders, and we have proved ourselves to be strong partners at Beschefer. We have had drill success up to 4.92 grams per ton over 28.65 meters in our latest drill program there. So I think we've proven ourselves as good partners, but also I think we've proven ourselves to fight through this market and provide them a return on their investment in the company, because we, as you said, our 52-week low was down near 4 cents. We could have, and we made the decision not to take on large financings at that level to move the Beschefer project forward. Now that was a tough decision, but at the same time, I hope that to partners like Wallbridge and all our shareholders, they now realize that was worth it, because we needed to find something that stood out in this market and really move our cost of capital back to a reasonable level that was obviously not as dilutive of where we're at, but provide something that would push through this market and position us extremely well for when we get the market back. So I think there's a lot of companies that have sat around waiting for the market to come to them. We've been aggressive because opportunities like this don't come up in a good market. So we made the decisions required to position ourselves to execute a deal like this. And I think we're in a position to be rewarded alongside all our shareholders, including Wallbridge, that I think and I hope are happy with how we've acted and us as operators at Beschefer.
I recently watched sort of a study based on like, is success based on hard work or on luck? And the conclusion was that it's based on both. And surely you've had both of those. And because again, sort of as you mentioned, the 52-week range is from 3 cents to over 30 cents. So it's a 10x, and you're closer to that high than you are to that low, obviously. So the market is giving you, value that the market is not giving to every other company out there, because I've seen good deals that are just not getting the value of the market. So you're definitely in a good position. And I mean, interesting time ahead of you. Excuse me. I'll be looking forward to further conversations. I don't think I have too many other questions right now. I'm definitely missing something though. So what did you come here hoping to talk about, but I'm failing to bring up?
Well, I think we've covered a lot of ground here. I think looping back just to the last question you had over Wallbridge's intentions, the intentions of us, intentions of the different shareholders. One thing that's very rare is to see 45% of the float on SEDI. So how many times do you see that? Very rare. So shareholders can have assurance that they have the transparency to see where management and the controlling shareholder is doing with their position. So I think that helps, well, at least helps with our support of the company, our confidence in the company, and really our liquidity event is on a takeover congruent with all of our shareholders, with that size and the current market conditions. So above that, I think we've covered a lot of ground. I think that B26 is a company making acquisition for us. I think that there's a lot of questions that people are saying that's too good to be true. I think over the next 6 months, we're going to outlay a comprehensive exploration plan, a 3D model showing our growth goals, being able to have initial success through our drill program in January, and hopefully, and I believe announcing a world-class advisory team that is going to add credibility to what we're putting together, but also provide value in considering early PEA conversations and plan. Because if we involve that today within our exploration plan, it gets back to where are we going to get the best return on capital? Because really, our strength is good capital managers, having the contacts to assemble really strong teams. And I think that's something that's largely been lacked in the junior mining space, is a focus on bringing the right people together, but also managing where you're going to get the best return on capital. And there's no guarantees, but we make that assessment. And as you said, it's hard work and luck. Anyone that says there's no luck involved in the mining business, I think you got to ask them to justify that. So we're going to put our best model forward. We're going to bring the best people together. And I think with the market conditions coming back at some point, it could be the recipe for success, and we could really hit this with good timing.
As we were watching that study, I told my wife that if somebody tells you that there's no luck involved in success, they clearly never drilled a hole in the ground. Because you can come across a void, you can lose a hole. There's a bunch of other things that can happen, and you almost got to get lucky to get that whole core out of there, and then assay it on time, and then ship it. And there's a bunch of other moving particles that you absolutely need luck for if you don't have it. So yeah, that's kind of proof. Yeah. This was a good conversation, John. I don't want to keep you up all day, but yeah, this was a good conversation. I'll put up your contact information on the screen if people watching this want to reach out. Again, the ticker symbol is AMQ. And thank you so much for investing your time in me.
Appreciate your time. Thank you.